Welcome to Caribbean Business Review, where insight meets impact. We bring you economic and financial updates, sharp statistical breakdowns, and data-driven insights on the forces shaping the region. Smart analysis, bold ideas, real Caribbean intelligence. This is CBR. Welcome everybody to the episode 5 of season 2 of the Caribbean Business Review. I'm Joseph Cox. Now, first of all, thank you so much for your continued support across all our social media channels, including MKR Radio. Our special guest this week is Michele Ottey, Principal Investment Officer and Caribbean Hub Lead at the International Finance Corporation, IFC, as we discuss unlocking Caribbean infrastructure and growth. And in the CBR briefing, we ask, is the Caribbean facing compliance or regulatory overkill? But before we dive in, we have to touch on the new foreign exchange mechanisms announced in Guyana. FX demand has surged nearly fourfold in just 2 years, driven by oil sector activity and a spike in credit card usage. In response, 9 new standard operating procedures now require invoices for forex requests, mandatory local accounts for oil firms, and stricter controls on credit card spending. These measures mirror the tighter foreign exchange controls long seen in Trinidad and Tobago, where licensing and capital restrictions are used to manage dollar scarcity. While Guyana's reforms aim to curb leakages and stabilize reserves, they also risk adding friction for businesses and investors, raising the regional challenge of how to balance stability with competitiveness. We'll be monitoring this closely, but for now, let's turn to the issues we are tracking in Market Watch and Global Pulse. Coming up in the Market Watch, Guyana tightens FX oversight with 9 new banking rules. Caribbean tourism grows 2% in H1 2025. Jamaica's unemployment falls to a record 3.3%. Then in the Global Pulse, Fitch and S&P sees limited ratings risk from U.S. shutdown, EU to halve steel import quotas, and global shippers stick with China despite U.S. port fees. All that and more this hour on Market Watch and Global Pulse. Coming up next is a CBR briefing. This is a CBR briefing. I'm Joseph Cox. Now today a simple question with big consequences. Why do so many Caribbean state agencies and financial institutions in trying to meet international standards go beyond what's reasonably required, slowing the nations, frustrating investors, and pushing money offshore? From overseas alumni shipping laptops to a school to long-standing customers told to repaper their bank files, the pattern is the same. Checklists over judgment. Instead of a risk-based approach, the actual international best practice, we get blanket demands for personal data, certified statements, and paperwork that add cost without adding safety. Here's the baseline. Global rules don't mandate one size fits all. They say scale checks to real risk. Low-risk gifts or known customers deserve light touch verification. Only escalate when risk indicators appear. That's how mature systems work. So why do we keep gold plating? 4 reasons. First, fear of blacklisting. Small open economies dread losing correspondent banking. Second, capacity gaps. Risk-based compliance needs skilled assessors and tools. When in doubt, people ask for everything. Third, liability aversion and silos. Overlapping laws and agencies create a cumulative burden. Fourth, external pressure. Correspondents and donors sometimes add stricter house rules than the standards themselves. The cost is real. Capital flight as people of means open accounts abroad. Chilled philanthropy as diaspora donors face intrusive asks. Project delays for schools and communities. And a paradox in banking. We hassle safe customers while real risks slip through less scrutinized channels. 2 quick scenarios make the fix obvious. 1. In-kind school donation from a transparent alumni association. Best practice, verify the organization and the authorized signatory. Run a brief sanctions or adverse media check. Accept a short source of funds note. Done. 2. A customer of 20 plus years with a clean history. Best practice. Trigger-based refresh. Confirm address. Confirm ID validity. Rescreen for sanctions or PEPs. If nothing changed, don't repaper the file. What should we change right now? For state agencies, 1. Tier due diligence. Publish a low to medium to high checklist with examples. Low-risk gifts shouldn't require bank statements or directors' home addresses. 2. Secure intake and data minimization. Use a secure portal. Collect only what's necessary. Set retention periods. Protect people's data. 3. Accept organizational substitutes. Audited financials or a bank or accountant letter can replace intrusive personal documents for corporate donors. And 4. Expedite lane. Time-sensitive, low-risk gifts gets a 5 to 10 business day turnaround. For banks, simplified due diligence. Eligibility, 10 plus years with a bank, clean history, stable profile, low-risk products. Controls, targeted data refresh, automated sanctions or PEP or adverse media rescreen, and continuous transaction monitoring. Now you only escalate these on triggers: material profile change, new PEP status, adverse media, unusual activity. Now PEP means politically exposed person, someone in a prominent public role or closely tied to one, like ministers, members of parliament, senior officials, and board members of state bodies. It is not stigma. It just means banks apply extra checks. Sadly, though, most persons who have served in these capacities are unaware of their designation until notified by their bank. And even when they do, it takes years after demitting office before their PEP status is rescinded. Applied bluntly, though, it discourages good people from serving. The answer is proportionality. Tier domestic PEPs by role and risk. Allow a salary-only source of wealth via a one-page payroll letter. Set a 12 to 18-month sunset after leaving office and use a PEP light pack, appointment letter, payroll confirmation, ID, and a sanctions rescreen cleared within 72 hours. The Caribbean doesn't need to choose between global credibility and getting things done at home. We need compliance that works for people, risk-based, proportionate, and secure. That's how we protect the system and keep capital, philanthropy, and innovation flowing across our region. This is your 90-second market brief. In Guyana, President Ali unveiled 9 new rules to tighten foreign exchange oversight after demand surged past $1.2 billion this year. The measures included stricter documentation and credit controls, and they aim to stabilize the market and prevent capital flight. The Caribbean welcomed 18.5 million stay-over arrivals in the first half of 2025, up 2% year-on-year, while cruise visits hit a record 20 million passengers, with the Bahamas leading the way. In Jamaica, unemployment fell to a historic low of 3.3% in July, adding more than 32,000 jobs. The Bank of Jamaica kept its policy rate at 5.75%. The Cayman Islands requested $107 million in supplementary spending, mainly for healthcare, education, and infrastructure, as its budget surplus narrowed. Meanwhile, S&P lifted the Bahamas to BB- on stronger growth and debt reduction, but revised Trinidad and Tobago's outlook to negative amid falling energy output and wider deficits. Bermuda advanced key reforms, capping overdraft fees and channeling new corporate tax revenues towards debt repayment, healthcare, and household relief. And in Barbados, a sweeping new immigration act modernizes border controls, work permits, and residency rules to align security with investment. But that's your market brief on the Caribbean Business Review. For more, look for us on YouTube and Spotify.
In a world of constant change, insight is your greatest asset. At Joseph Cox & Associates, we empower innovation across the Caribbean. Whatever your challenge, we can help. We're proudly customer-centric, offering bespoke solutions tailored to every partner. From innovation and digital transformation to leadership and policy, our services are designed to deliver lasting impact. We partner with leaders across sectors, from finance and government to energy, tech, and infrastructure, helping them navigate complexity with confidence. Our work is grounded in collaboration. We connect regional leaders through powerful networks, driving change through joint research. Discover more at josephcox.org. Joseph Cox & Associates. Insight, experience, impact.
Still ahead on Caribbean Business Review, our conversation with Michele Ottey, Principal Investment Officer and Caribbean Hub Lead at the International Finance Corporation, as we discuss unlocking Caribbean infrastructure for growth.
The Caribbean has a massive infrastructure gap, and it cannot be financed by governments alone. However, some of our procurement laws in the Caribbean assume that the government is procuring services or office chairs or desks. It does not contemplate with long-term contracting of assets on the basis of performance. It does not contemplate the government procuring that moves from outputs, or you build this or you give me this, to outcomes. You deliver this under these contractual terms. And so reforms of the procurement laws are going to be very, very important to promulgate PPPs. And PPPs are important for infrastructure because infrastructure drives economic growth.
Okay, welcome back, everybody. This is the Caribbean Business Review. I'm Joseph Cox. Today, my very special guest is Michele Ottey, and Michele is the Principal Investment Officer and Caribbean Hub Lead for the International Finance Corporation Transactions Advisory. Michele, boy, what a long title. But for those of us who know you...
It's a mouthful.
For those of us who know you a long time, we just call you infrastructure nerd. I think that covers you.
That pretty much covers the whole gamut of what I do. You've just summed it up in 2 words.
Indeed, my friend, indeed. All right, Michele, as we start to look at and start our conversation today, I suppose we need to, as just a matter for context, the IFC is known as the private sector arm of the World Bank.
That's correct.
Question: within the context of the Caribbean, what exactly does that mean? What does that translate to?
Within the context of the Caribbean, that translates to the full spectrum of what is needed to unlock private sector interventions. So in terms of our advisory teams, they do work to support the reforms that are needed on the business environment to support the promulgation of private sector investment. My team, in terms of our transaction advisory team, we specifically work as advisors to governments that are looking to develop infrastructure with the private sector. And so they would come to me and say, Michele, I want to do an airport, a port, a road that I would like to develop with the private sector. And our role is to support them in terms of looking at the feasibility assessments, doing the due diligence, technical, legal, financial, and preparing a transaction structure for approval by the government, which is then tendered to the private sector. We manage a bid process, develop bidding documents, and take it to a point that the government has signed a binding contractual agreement with the private sector to develop the infrastructure. The financing is then raised and then essentially after that, shovels go into the ground. When you have a private sector partner who, say, has been awarded an airport, like Norman Manley Airport, which we advised on, for example, and they now need to raise the financing to do the development, IFC on the investment side can also provide financing. For Chinese wall purposes, we separate that advisory work from the investment work. Why? Because when I am engaged, I am intended to be a neutral broker to the government. My duty of care is to the government, and so I cannot be biased on what is right for IFC on the investment side. My duty of care is to deliver the best value for the government in terms of the financing that goes along with it, irregardless of who provides it. So we start from reforms to providing advisory work that leads to direct private sector investments to financing those investments. So we do debt, equity, mezzanine debt, all forms, and really it is to unlock greater private sector driven growth in our economies.
No, I hear you on that. And that's actually quite fascinating because one of the challenges that I suspect that we have is, well, one, we have a big issue of developing what we call bankable projects. That's a
Yes.
given. But the other side of it is that for the governments, and it's interesting the take you have on it, but for the government, in most cases, they do not have the funds, right? Or the wherewithal, frankly speaking, to effect some of these larger infrastructure projects.
Yes.
But aside from Jamaica, I'm not seeing a lot of appetite for that across the region for the public-private partnerships. And I'm wondering, what is it that you can do to probably try and bridge that gap? Because frankly speaking, for a number of the roads that need to be built, frankly, without a private sector partner, I'm not sure how viable those things will be over the medium term.
Yeah. So Joseph, you're spot on, because if you think about it, Jamaica was one of the first. If you think about it, think about Highway 2000. I mean, as you know, as a Jamaican, I remember Highway 2000. Highways were coming to Jamaica. It was Y2K. You thought the world was going to end, but highways were being built nonetheless. So that's where we started to see PPPs. Then following that, the other big PPP transaction was the Sanksa International Airport, which was tendered in 2003. We're now in 2025. So you recognize that Jamaica has a 25-year plus history in doing PPPs. They have done the port under that modality. They have then done Norman Manley International Airport under that modality. They have done water under that modality. They have done a range of infrastructure. So by far, Jamaica is the most mature in the Caribbean. But that doesn't mean that we leave the rest of the Caribbean out. If you look at it and we go into the Eastern Caribbean, Barbados, Prime Minister Motley, quite visionary, as you know, has been very much focused on the energy transition because they have set a goal to be 100% renewables by 2030. Now, the dates on that may change, or that percentage may be 95 to 100. But by and large, they are committed to getting that done. And so we are supporting the government of Barbados on developing the first utility scale onshore wind project, and that is the Lambert's wind project. That transaction is coming to market in terms of within a month or two. So we will start pre-qualifying investors. But in the same vein, the government of Barbados is doing battery energy storage. They are doing green hydrogen. They are doing different modalities. Let's go beyond that to Belize, where we're doing solar, where battery energy storage is being done. To Jamaica, where broadband is about to be tendered, and where we see other things happening, such as the roads, which are going to be tendered. So what you see in Jamaica is really a modality that says that we are now moving forward aggressively and transactions will start coming to market. Again, Jamaica broadband is something that you can expect to see coming to market, I would say probably in early 2026. So there is Jamaica, but we're also working in countries like Haiti, in the French-speaking Caribbean, where the government is looking at rural water supply in Las Caobas, where we are looking at renewable energy solutions. So we are not just a single country advisor. Jamaica dominates that, and it dominates our pipeline, no doubt. It is probably about 66% of our total pipeline in the region because of the sheer volume of infrastructure that the government is doing. They have Vision 2030. They have a very strategic and intentional program for developing infrastructure. And that's where we see the dominance. But the others in the Caribbean are not to be left out.
No, I take your point on that. But you see, the thing is this, because when I'm looking at some of the other countries, to be honest with you, I don't know that, and perhaps I'm wrong, but I have not been able to identify any kind of dedicated PPP legislation that will and process that will really drive and govern that whole exercise. And I'm wondering then, is it that you're going on a, I don't want to call it ad hoc, but a case by case basis, but
Yes.
at the back end, you're also developing a structure? How
Yeah.
you actually do this?
I think sort of there are two approaches, and I think you are absolutely right. What it typically starts as you said, is a case by case, a single transaction that they say, I want to do this transaction. But as governments look at replicability and look at scaling up their infrastructure delivery, this is when a policy framework is helpful. Not necessary, but helpful. Why? Because investors like to understand when they're stepping into a new jurisdiction, what are the rules of the game? And if there's a policy framework, that easily allows them to understand the rules of the game. If the rules of the game are not spelled out in a policy framework, then you have to deal with it contractually. Take Jamaica as an example. Remember I said to you, first transactions was the highway in Jamaica, followed by Sancton International Airport in 2003. The PPP policy framework in Jamaica did not come into effect, I believe, until 2012 and was revised again in 2018. So it came after transactions. So they started with one-off transactions. Then there was a push to say, we are going to do this in a more systematic manner. And so then they moved to a policy framework. What I will say is I've not seen much in terms of laws or actual legislation for PPPs. We see this more commonly in Latin America because they are civil law countries, and so a lot of these things are codified into law. Whereas in the Caribbean, we are common law countries, and so it is not codified and not as prescriptive. What you have is policy frameworks, PPP policies that guide, but usually not a PPP law. Now, it's not to say we can't go the route of a PPP law, but we've not yet seen it in the Caribbean.
All right, I hear you on that. But then when we're looking, for example, can you see, I'm looking at it from the perspective that you also have a large push in terms of MSMEs, right? You're looking at
Yes.
building out that framework.
Yes.
And to be honest with you, I don't know how successful that's going to be without an actual frame, without a structured frame to work within. As if you're working with your MSMEs, a lot of them, frankly speaking, I mean, first of all, it comes down to almost a matter of definition, because what we
Yes.
call the small, medium and enterprises, frankly speaking, in larger markets are
Micro
micro business. So
Some of them are mom
I,
and pops.
exactly. So I'm just wondering, how do you then navigate, how you tread those waters when you're trying to add value?
So this is where some of our advisory teams actually play a vital role, as well as what we call a financial institutions group, because it is really looking at how do you provide financing solutions to the medium, small, and micro enterprises, which are not the big entities, but also have an important role to play in driving growth in the economy. And so it is looking at solutions which are tailored to a different segment of the market, as well as helping that segment from a governance perspective to understand as they grow their businesses, how to do so in an efficient manner. So there is some advisor support to these businesses, to MSMEs, to things like smaller women-led businesses. You have a lot of businesses that emanate from women. They have ideas. They put it starts in their house. And how do you then sort of formalize that? So there's advisor support. But then as these businesses grow, they need capital to grow. And this is where our financial institutions group come in. Because what they do, they will work with the bigger lenders, the commercial banks, etc., to set up lending facilities for MSME. So they will provide financing to a large commercial bank who will then have an on-lending facility to the MSMEs. And we then provide support in terms of what kind of framework has to be in place to enable MSMEs to borrow, what kind of governance, what kind of support. So IFC would work both in terms of support to the MSMEs as well as support to the financial institutions group that does on lending to medium, small, and micro enterprises, because we ourselves are not equipped to lend directly to these entities.
No, I understand that, and but it raises a very knotty issue, frankly, Michelle.
What's that?
Because over the years, when you have institutions like yourselves, like IFC, which will provide some funding for the commercial banks or some other grouping for them to unlend, right?
Yes.
We usually have two factors that come into play. And I want to know how you deal with it. you trust me, if there's one person I know who knows this, is you. One, the spreads that the institutions usually put on it. Sometimes relatively low cost financing suddenly turns out to be not so low cost because of the spreads that they're there. That's one. And two, the age old issue which people don't like to speak about too often, and is that even though you may provide a dedicated line of credit, basically, right? The institutions usually subordinate your funds in favor of what they have in their pipeline, and therefore it becomes a lot of the benefit, a lot of the impact is then mitigated because of this strat, right?
Yeah.
How you cope with those things?
And it's a very real issue. And so this is why it is actually important that when we do support to MSMEs and we are helping a bank, for example, to set up a window, some of it is with commercial banks, some of it may be working with financial institutions that reach smaller people, rural areas, but some of it is helping them to put in place frameworks for lending. If you think about lending to MSMEs, they are very different than a large enterprise that has a big corporate balance sheet, that may have a lot of collateral. When you're thinking about these small MSMEs, some of them are creative businesses, I'm a dressmaker you don't have that heavy collateral. So it's understanding the cash flows and understanding how you lend to those entities, which tends to be cash flow based lending as opposed to collateral based lending. But one of the things that we have found, which is interesting, because these people are actually, this financing is their lifeline, they are some of the best in terms of paying. So when you look at things like in terms of arrears, these are people who pay because this financing matters to them and they do not have a lot of avenues for financing. So what you have to do is actually target it at the level of the financial institutions to which IFC is providing support, to put in place the mechanisms to allow for the financing to MSMEs on terms which actually preserves the integrity of what we are trying to achieve, and ensuring that the underlying governance and supporting frameworks are there to ensure that the intended benefit trickles down to the level that it should.
I've been doing, I read something the other day and it just fascinated me. And as I was listening to it came to mind that women actually have a higher repayment. How should I say? No, I call it history.
Our repayment history, no, it absolutely is. It absolutely is.
But I don't follow. Why? Why is it that women are more diligent in terms of the repayment versus us men? Why? I don't understand.
Well, I don't know. Maybe it's discipline. And maybe it is also looking at, because, if you think about just life in general, things that are important to people, they will put in terms of as a priority. And so if you are a woman-owned business and this is your lifeline and your lifeblood, this is going to be your priority to protect that. And so before you do too much, before you do anything else, you're going to make sure you pay your loan because you don't want somebody to call that loan. You don't want to be in problems with the bank. And so sometimes it comes down to priorities, because a lot of women in the Caribbean are breadwinners for their family. Some of them are single mothers. They have to put their child in school. They cannot afford to have an issue with their financing being pulled or being in a problem with the bank. And so I think some of it actually comes down to, this is a priority for me. And so I'm going to make sure that I take care of this obligation before money goes elsewhere. And so for me, if I just think about it psychologically, I would say that is probably some of the reasons that we see such impressive track records in terms of women and how they manage their financial affairs and obligations.
It's fascinating though, and honestly, I must confess. But going back to the issue, because you point out that you look on cash flows in terms of the affecting the lending and so on. But then we all know that our financial institutions right across this region are highly, highly conservative. So you're looking at people sometimes who, in terms of collateral, that's the collateral aspects of it,
Don't have it.
they're asking for up to 150, 175%, right?
Yeah.
Now, I hear you in terms of the cash flow. And yes, it makes sense given who your target is. But how do you scale that proverbial bridge? Because you know our banks are very conservative and therefore
Yeah.
they want all sorts of securities with this.
So you actually have to scale the proverbial bridge at scale. I give you a classic example. IFC is now advising the government of Jamaica on the development of a national broadband network. And we look at the government deploying a network that essentially will pass more homes. But when you get into the rural areas, that last mile that takes it from there to the home, it's a small ISP, it's a mom and pop shop. And they need to get financing to do that. So we have been working, for example, with the Development Bank of Jamaica, which has broader goals in terms of supporting economic development and activities. And DBJ is actually looking to develop a special window for these ISPs that they can come and get financing, which is not, as you said, the typical collateral-based lending, but understanding that they're lending money to them, which is going to create a future revenue stream that is going to give them greater ability to service a loan. But it also has to be cognizant of the realities on the ground. These guys, you see, like when you're in Kingston, if you don't pay your cable operator in a month, you get cut off. In the
Yes.
rural areas, many of them, they support farmers and they know that these farmers can't pay their bill till they have a crop come in. So they may not get paid for 3 months, but they have an agreement. They know John Brown and they know his crop coming in and they're low for 3 months. They're not cutting him off. So again, you have to talk about that because cash flow is not the stable month-to-month cash flow. It may be cyclical. So DBJ, again, as they look at the Development Bank of Jamaica, looks at supporting economic development, looks at supporting these MSMEs, and in this case, ISPs, is saying to us, let's develop a window for that, which is on the different terms, acknowledging and understanding the nature of it. And what this does then is that it opens up a window for multiple ISPs to come in and be looked at and assessed differently in terms of the way that their risk is assessed, in terms of the way that security is assessed, in terms of understanding that there may not be hard collateral. These are like cables, connections going into people's homes. But what you're actually doing is lending into future cash flows. It's cash flow lending. Very different.
No, I understand that, but how do you mitigate against the contagion risk that sometimes attend to that sort of intervention?
So there are some things that you can mitigate partially. There are some things that you cannot ever mitigate fully. What you have to look at is understanding the structural challenges that they will face. You have to understand who is the market that you're serving. You have to understand how you tailor that facility to meet the market as best you can. But there is nothing that is 100% sure in life except death and taxes.
So quite well for some they might say the tax is not so sure, but yes, your point is
Well,
well
if you don't pay your taxes, Joseph, I sure somebody coming for you. Trust me.
Oh
Trust me.
yes, oh yes, oh
And you have to
yes.
hold out and wait for like an amnesty to come correct. Trust me on that.
No, but I'm curious because, for example, I mean, whereas on the one hand, I understand totally what you're driving at and what you're seeking to achieve. On the other hand, one can't ignore the reality. So, for example, we in Jamaica and throughout most of the region save and accept little Bermuda. It's very significant area is Bermuda. Bermuda now has 5G.
Yeah.
Right? Ghana, they have one firm that said they're offering some kind of 5G thing, and I leave it at that. But the bottom line is that for the large providers, Michelle, the normal providers, they are saying that's too expensive to introduce 5G to the region. Now, within that context, my fear is that even with the interventions that you guys are looking at, if we're not careful, the region is going to get left behind just in terms of this straight technology. Because obviously, with, for example, 5G opens a whole new vista of opportunities for everybody, frankly speaking.
Yeah, but it takes bandwidth. It takes bandwidth.
Agreed. So
And
how
so,
you
Josie,
navigating this?
timely, because what are we having in Jamaica this week? The ICT week. And this has been something that we've talked about, that the government now needs to look not just at a broadband network, but needs to look at a subsea cable that is done by a neutral provider. Because at the end of the day, international connectivity is going to be important to support this. And the reality is that the technology has changed. And so if you look at the newer, more modern cables and the kind of terabits that one cable can bring to the island, it is phenomenal. And that technology has changed because the world that we live in has changed. Because as you said, you move to 5G, it requires much greater bandwidth to support that. So the infrastructure has to be there to support the uptake of the digital economy, but also the cost has to go down. At ICT Week, I was listening to a gentleman from Island Net, and he was talking about the experience in Puerto Rico. And he says in Puerto Rico, the cost of internet is significantly lower. And when somebody said, how much lower? He said, internet in Jamaica costs, and a monthly connection costs 10 times what it costs in Puerto Rico. 10. Now, talk to me about competitiveness. Talk to me about us moving to a digital age. We have to address the cost structure. 10 times is crazy.
Of course. Of course. But the thing is that, because you see, I'm also looking at development potential that comes on that 5G rubric.
Yeah.
And it comes the question of obtains. Similarly on the power side, because we know that artificial intelligence and those interventions require substantial power, right?
Yeah.
I'm just wondering from where you sit, Michelle, as a region, are we ready? Are we preparing the groundwork to be ready to step into that and take advantage of those those emerging opportunities?
What I would say is I don't think we are all the way there in terms of being ready, but I think we are getting future ready. And if you look at Jamaica, for example, Jamaica is looking at diversification of its energy. And if you look at it, there is a plan for the development of 1,000 megawatts of renewable energy. So we've had success with solar, we've had success with wind, and these modalities, as the technology gets better, as we get more efficient at it, continues to drive down costs. But it also helps in terms of our climate footprint. Very important, because in the Caribbean, we are disproportionately affected by climate events. And the cost
Absolutely.
of those climate events in terms of, what was our once in 100-year hurricane is now once every 10 years, once every 5 years. And so that cost our economies is phenomenal. So I will say that I think we are preparing to get there, and it is happening in different ways. It is also happening in terms of even financing and how sovereign financing comes in. A big proponent of that has been Prime Minister Mia Mottley and the Bridgetown Initiative, which is now at Bridgetown Initiative 3.0, looking really at those sort of debt clauses and those forgivenesses, and that event in an event in terms of like a catastrophic event, a hurricane, etc. How do they pause on debt? Because at a time when economies are devastated, this is when policymakers least have budget to be able to deal with debt, because they have to
No,
deal with the rebuilding of our countries. So I think you start to see coming in different ways, and being addressed in different ways in terms of being ready for the future. And so I would say we're not there yet, but I think kudos to the policymakers. We see them thinking about it. We see them being proactive in addressing it. We are not there yet, but I think the next few years will be crucial as to how we make that transformation and that transition.
which makes absolute sense. But then the other side of the dynamic is that a lot of the debt that the countries have now, it has now switched from external agencies, so to speak, and a large percentage of it in most countries is actually dominated by their own financial institutions, whether banks, insurance companies, whatever it is, right? So in terms of the mitigation, because you say, all right, fine, you want to do some debt forgiveness, etc. It's within their own country that they'll be absorbing the fallout, so that they are not able to spread that risk because it's all internal. Now, how you navigate that in that dynamic?
I wouldn't say it's all internal. I think, as you
Well, not
rightly say,
all,
it's
but
been dominated. It has been
yeah.
dominated internally. I think what we're seeing is greater diversification. So look at Jamaica, for example. Jamaica did a securitization of the future flows from the Norman Manley Airport concession. So in 2019, Jamaica concessioned Norman Manley International Airport under a 25-year concession. So the government has a 25-year revenue stream that is coming to it from an asset that it has concession to the private sector. And essentially what the then Minister of Finance, Nigel Clark, did was to go to the international markets and essentially securitize a future flow of revenues to raise money upfront, which is now used to fund today's budget without taking on more debt stock. It's essentially leveraging what they have. Then you look at countries like Barbados, which is doing things like debt for nature swaps. And so I think what we're starting to see is a lot more innovation. It is no longer plain vanilla. We go to the international capital markets, or we go and we issue government securities. Now we're looking at how do we optimize fiscal space? How does a government raise debt? How do they do so in a manner that is balanced? How do they manage risks in terms of having risk around catastrophic events so these events don't destabilize a country? Because we're very prone to these
Of
to
course.
vulnerabilities and these exogenous shocks. We are prone to it. We know it. And now what you have, for example, in Jamaica is multi-layered insurance that is triggered in the event of an event such as a hurricane. And if you have a Cat 4 or Cat 5 hurricane that you're devastated, they can call on insurance.
Yeah.
And so
Yeah.
that is something, for example, that the World Bank has done in Jamaica. They're looking at it in other countries, but there is also insurance that is coming from other sources. So again, I think what we're seeing is it's no longer, while it was dominated by government securities, yeah, man, treasury bills, and everybody just invests in that. What we're seeing now is greater diversification. And as our debt to GDP reduces in the Caribbean, and as we have access to the international markets, and as our ministers of finance and policymakers become more innovative in their thinking and really start to say, what is the right fit for my countries? How do I utilize and monetize the assets that I have? How do I do things like debt for nature swaps that protect me and give me back money or savings that I can invest in other things? And so I think this is a super interesting time for the Caribbean. And so it's kind of like buckle up for the ride and just see, because I think we are on a trajectory that is changing and transforming the way that we see governments finance their expenditure. It is no longer just about, oh, we're going to levy taxes, we're going to issue some more treasury bills. I think those days are behind us. And so now it is what combination of tools, what fiscal and monetary policy, what allows them to preserve macroeconomic stability. And the dialogue is changing, the tools are changing. And I think it's a really, really interesting time for the Caribbean.
Well said, well said. For almost, well, we're almost out of time now, but the question, I suppose the last question I have time for you is, from where you sit,
Yeah.
if you could point out or identify or suggest to the governments throughout this region one or two policy reforms that you think would be absolutely transformative, what would those be?
In terms of policy reforms, I think it is, and some of them is actually not policy, but also just embracing, because we started about speaking about the fact that the Caribbean is a nascent PPP market. The Caribbean has a massive infrastructure gap, and it cannot be financed by governments alone. However, some of our procurement laws in the Caribbean assume that the government is procuring services or office chairs or desks. It does not contemplate with long-term contracting of assets on the basis of performance. It does not contemplate the government procuring that moves from output, or you build this or you give me this, to outcomes. You deliver this under these contractual terms. And so reforms of the procurement laws are going to be very, very important to promulgate PPPs. And PPPs are important for infrastructure because infrastructure drives economic growth. People will tell you, yeah, what's the big deal about infrastructure? Well, the day you don't have electricity, you don't have water, you have potholes on your roads, the airport not working, you will know how important infrastructure is. It is the single most important thing to us all. And the governments have to recognize they cannot do it alone. And as we want to move more to first world standards, we have to move to first world infrastructure. And to do so, we need to reform our procurement systems, our procurement laws, how we procure to allow us to move in to the next era of the evolution of the Caribbean. If we want first world, we have to be first world.
Couldn't have said it better, my friend. I could not have said it better. But we have to leave it there for today. So, Michele Ottey, let me get all of this title in one breath.
You could shorten it, you know.
No, so Principal Investment Officer and Caribbean Hub League for IFC Transactions Advisory. I love it.
Josie, I love where you started because you said, what is it that you do? You're basically an infrastructure nerd. And if everybody remembers, I'm an infrastructure nerd. I love infrastructure. I figure out how to develop it. I do it with the private sector. Then you understand what I do. Let's keep it simple. Let's keep it real.
No, I agree with you. Yes, that's what I keep telling people. That sometimes the titles are there, yes. I suppose you have to regard them, but sometimes simpler, better it is. But thank you so much, my friend.
You and I are simple people. We're about the substance
exactly.
of it. Call me what you want to call me. Let's get it done.
Let's get it done. I agree with that sentiment. Thanks so much, Michele. Hope to
have a pleasure as always to talk to you.
Indeed, my friend. Indeed, indeed.
In a world of constant change, insight is your greatest asset. At Joseph Cox & Associates, we empower innovation across the Caribbean. Whatever your challenge, we can help. We're proudly customer-centric, offering bespoke solutions tailored to every partner. From innovation and digital transformation to leadership and policy, our services are designed to deliver lasting impact. We partner with leaders across sectors, from finance and government to energy, tech, and infrastructure, helping them navigate complexity with confidence. Our work is grounded in collaboration. We connect regional leaders through powerful networks, driving change through joint research. Discover more at josephcox.org. Joseph Cox & Associates. Insight, experience, impact.
Welcome to Market Watch. I'm Joseph Cox. In Bermuda, Premier David Burt has moved to rein in bank fees, limiting overdraft and over-the-limit charges to once per month and requiring explicit customer opt-in. The reforms, which take place in April 2026, align with global standards and guarantee all residents access to basic accounts. Meanwhile, the Tax Reform Commission projects corporate income tax revenues of $600 million annually from 2026. In Trinidad and Tobago, the central bank has held the repo rate at 3.5% as the economy shrank 2.1% in the first quarter, with energy output falling nearly 5%. S&P has cut the outlook on the country's sovereign rating to negative, citing weakening buffers, fiscal deficits of 6% of GDP, and heavy dependence on the energy sector. In the Bahamas, S&P has upgraded the sovereign to BB-, highlighting reduced deficits and falling debt. Year-to-date, visitor arrivals rose 8.5% to 7.4 million, led by record cruise passenger numbers, though air arrivals slipped slightly due to limited accommodation. In Jamaica, GDP expanded 1.6% in the second quarter, while unemployment dropped to a historic 3.3%. With inflation at just 1.2%, the lowest in decades, the Bank of Jamaica has kept its policy rate at 5.75%. The Independent Fiscal Commission, however, flagged underspending on capital projects even as debt to GDP fell to 62%, 2 years ahead of target. And in Guyana, 9 new foreign exchange rules have been introduced to curb capital flight and stabilize reserves after FX demand tripled to more than $1.2 billion so far this year. Regionally, the Caribbean Tourism Organization reports stay-over arrivals up 2% in the first half of the year, with cruise visits setting a record 20 million. 20% above pre-pandemic levels. Around the region, the Cayman Islands approved an additional $12.7 million Cayman dollars for Cayman Airways to cover long-standing debts and underfunding, while seeking $107 million in supplementary spending across healthcare, education, and infrastructure. In Belize, the Statistical Institute has revised the growth rate for 2024 from 8.2 to 3.5%, with the explanation provided that earlier estimates were based on a more limited data set. Grenada's new $5 million retail bond has drawn over 500 visitors in its first week, almost matching 2 decades of ECCU participation, with entry set as low as $500 to promote small-scale wealth building. And in Barbados, a new Immigration Act modernizes entry and residency rules with biometrics, updated permanent residency criteria, and stronger penalties for smuggling, while aligning with CARICOM and international security standards. Before we close, let's take a quick look at the region's currency and stock market movements. On the currency market, the Jamaican dollar traded at 161.34 to the US, while Ghana's dollar held at 2.18. The Eastern Caribbean dollar stood at $2.71 and Trinidad and Tobago at $6.78. In the North, Bahamian dollar remained pegged 1-to-1 with the US. In regional equities, the JSE index closed at 323,498 points, slipping 0.36%, while the All TNT index gained 0.61% to 1,435. On the ECSC, stocks rose 2.33% to 169.42, with the BISX, BSC, and Bermuda's BSX all flat on the day. Top movers, Pulse Investments surged 18.1% in Kingston, while AS Braddon gained 14.6% in Port of Spain. Among the laggards, LG Williams B shares fell 11% and West Indian Tobacco dropped just over 9%. Well, that's it for this edition of Market Watch. I'm Joseph Cox. Stay informed, stay ahead. Global Pulse is up next. Welcome to Global Pulse. I'm Joseph Cox. We begin with the maritime sector, where Chinese shipyards continue to dominate despite looming U.S. port fees. Starting October 14th, Chinese-linked ships calling at U.S. ports will face fees of more than $1 million per large vessel, rising annually through 2028. China has already approved new maritime countermeasures, however, allowing retaliatory tariffs, port restrictions, and service denials against countries imposing discriminatory rules. Turning to the energy sector, ExxonMobil will cut 2,000 jobs worldwide, about 3 to 4% of its workforce. The move comes as Brent crude prices are down more than 10% this year, pressured by rising OPEC Plus output and softer global demand. And in the United States, manufacturing has declined for a 7th straight month. New orders fell, employment remained weak, and tariffs are adding up to 20% to costs in some sectors. Meanwhile, private payrolls dropped by 32,000, the steepest fall in more than 2 years. In the meantime, Fitch has said the U.S. government shutdown will not affect sovereign ratings near term, projecting the deficit to narrow to 6.8% of GDP in 2025 from 7.7% in 2024, supported by $300 billion in tariff revenues. S&P Global added that shutdowns are not credit events, but warned they could trim GDP growth by 0.1 to 0.2% per week if prolonged. Now turning to our global updates. In Europe, Brussels will halve steel import quotas and raise excess tariffs to 50%, while also reviewing aluminium safeguards. The UK manufacturing PMI fell to 46.2, the weakest since April, while house prices rose 0.5% in September, up 2.2% year-on-year. In terms of the EV market, US automakers warn sales could collapse after federal $7,500 tax credit expires, with EV registrations projected to fall 27%. In terms of banking, U.S. regulators are preparing to ease Basel capital rules, potentially freeing billions for lending and buybacks, but raising financial stability concerns. In the EU-UK relations, London and Brussels are nearing a deal to shield British firms from the EU's carbon border tax ahead of its rollout in 2026. Turning to the markets, on the energy markets, energy futures were mixed. WTI crude settled at $60.88, up 0.7%, while Brent gained 0.4% to $64.37. The OPEC basket slipped nearly 3% to 67.22, and natural gas fell by more than 3% to $3.32. On the equities side, Wall Street closed higher with the Dow up 238 points or 0.5% and the S&P 500 fractionally positive. The Nasdaq eased 0.3%. In Europe, London's FTSE added 0.7% and Paris's CAC gained 0.3%, while Frankfurt's DAX edged low. In Asia, Tokyo's Nikkei jumped 1.9%, its best performance in weeks, while Hong Kong's Hang Seng slipped 0.5%. Now that's it for this edition of Global Pulse. I'm Joseph Cox, and this is the Caribbean Business Review. Well, that's a wrap on episode 5 of season 2 of the Caribbean Business Review. Thank you to our loyal audience across all our social media platforms and MKR Radio. We do appreciate your continued support as we live by our mantra that knowledge is strength, but information is power. A special thanks to our guest this week, Michele Ottey, Principal Investment Officer and Caribbean Hub Lead at the IFC, for her invaluable insights on unlocking Caribbean infrastructure and growth. Now, some of the key takeaways from our conversation is in terms of infrastructure and PPPs. The IFC sees infrastructure as a priority, with Jamaica's PPP record and Barbados's leadership in renewable energy showing what's possible if procurement laws are modernized. In terms of inclusive growth, MSMEs and women-led businesses are driving competitiveness, with higher repayment rates proving their resilience and reliability. And in terms of future readiness, high internet costs, the need for energy diversification, and innovative financing all demand bold policy reforms for resilient infrastructure. Remember, you can catch this program on Spotify, and the latest edition of the Caribbean Financial Dispatch newsletter is now live on LinkedIn, WhatsApp, and linked in the YouTube comments. If you wish to subscribe, please contact us at caribbeanbusinessreview@gmail.com. As always, we invite you to like, share, and subscribe to this broadcast on TikTok, Spotify, YouTube, Instagram, X, and LinkedIn. Until next week, same time, same place, I'm Joseph Cox, and this has been CBR.